Hey, we're here. What's up, everybody? Welcome to
Yep.
Market Power Hour. I've had nothing but issues on my computer recently. I'm about at the point where I'm gonna have to get something new. So, anyway, thank you for your patience, guys. Welcome in. Grab a seat, get your popcorn, get your McDonald's. We're about to get this all kicked off. I have with me today Josh and Schmitty. They are both on the call, ready to go. Um, because I've made you guys wait, we're just going to go ahead and get things kicked off. I know everybody's excited to kind of hear what's going on. Big events. There was a 0.25 interest rate increase that just happened hours ago. So we're just able to look at what the market is doing fresh on the heels of that. So without further ado, we're going to kick things over to Schmitty to lead us off here to get things started.
Yeah. So you need to enable screen share.
Uh, what do you mean? It's been enabled. I just clicked it. It's done.
Also, Jack, it's called a 25 basis point hike. Okay.
Okay,
Get the
0.25.
language right, first of
Okay.
all.
Here's another thing we're gonna do is
Okay.
play with
So
the screen.
okay. Do you see this?
Whoa. Okay, hold on. It's on my end. There we go. Yep, that should look good.
Whoa, why is it all zoomed in? Okay. All right. So yeah, I'll go ahead and kind of pick up where I left off 2 weeks ago, which was right when we were doing the market power hour where we were doing this deal here, where the Dixie was kind of plunging through the support. It finally broke this level. And the market's kind of just figuring out what it wants to do with this whole thing. Um, Personally, because it is a you know almost a 10-year range, I'm inclined to lean more toward the monthly and take guidance from the monthly than the weekly. But there is some stuff that we can look at on the weekly here. It is good that if you're a bull on basically anything, it is good that this is plunging through support. This gives you hope. This is your lifeline. And essentially, what we're looking for is if this thing does close a monthly close inside the range, then that's going to hint most likely toward a move to the bottom of the range. And when this happens, that will most likely yield it'll give way to a new bull market. When I say bull market, I don't mean like, oh, it's up for a couple of months, down for a couple of months. I mean like probably like a 12-month, multi-year bull market across equities, crypto, commodities, you name it. It's gonna flourish. But some things to keep an eye out on, because I'm apparently the bummer of the group. Uh, as we're making these three lower lows, unfortunately, it is diverging really heavily. There's some humongous RSI divergence, hinting toward, just like I talked about before with the three pushes to a high. There's also a three pushes to a low, which typically is one, two, three, and then it reverses kind of thing. Um, and this is has all the telltale signs of, like, this is the canary in the coal mine. If it does reverse here, we're all going to look back in hindsight and be like, duh, of course it did. We see three consecutively lower lows, but RSI is flat, right? I didn't draw that line straight, but it is flat. And alternatively, the way you can view this as well is the peaks on this rally are making lower highs, but the RSI itself is actually making higher highs, which is a form of, it's called hidden bullish divergence. So we have, not only do we have bullish divergence here on the lows, but we have hidden bullish divergence on the highs. And all that to say that this isn't the momentum you're looking for here. Um, and I reserve judgment again until the monthly closes because things can diverge indefinitely. But for me, what would give me really good confidence that this is going to be a solid close, and when I say close, like when we look at the monthly, it'll look something like this, right? So we have our zone here outlined. Boom, boom. I want to see it closing down in here because otherwise, on a macro basis, it's going to look like just a throwback to support. Resistance turn support. And so I'm looking for monthly guidance here. It's on a logical level here for the monthly. It's just striking distance away from the 50 EMA. On the weekly, it bounced clean right off the 200 EMA. Um, we do have some sort of bearish metrics that we can look at, but the big thing that I'm watching is this RSI divergence as we go into the monthly close in a few days. So what does that mean for crypto? You know, the long and short of it is, no pun intended, Dixie down, everything else up, including Bitcoin. And if Dixie bounces, well, then Bitcoin's going to do the opposite. And the reason why I'm so interested in this bearish or bullish divergence here is because Bitcoin is bearishly diverging. While wait, I think I said this wrong. Dixie is bullishly diverging as Bitcoin is bearishly diverging. And I'm going to show you a couple of things that we should keep an eye out on. The first thing we'll look at is look at CME futures. A few months back, it triggered what is arguably, one of the stronger cloud plays, which is an edge-to-edge play. So once it closed up in here, it has a really good opportunity to run from here to here, and it's kind of just fallen flat. And not only is it fallen flat, but it's turned right at logical resistance. And it's just kind of hovered around here so long that it actually completed the edge to edge on the lower side of the cloud. So when we look at this thing, typically we would want to see a strong move from here to here, maybe even pushing a breakout, but that's not what we see. We see it coming back down and then rallying and turning 4 weeks in a row at the edge of the cloud. And when we couple that with the level of the zone of resistance and the RSI divergence, which I'll show you here. I'll zoom this in a little bit. Boop, get out of here, volume. You can see here quite clearly it's doing the opposite of what Dixie is doing. So we're seeing higher highs, we're seeing lower highs on the RSI here. Some other signs, sorry, my dog's barking, I don't know if you can hear that, but some other signs that are giving me pause as well is like even little things like when we look at the S&P 500 or we look at SPY specifically, there's a big ass daily M top that's forming. In the grand scheme of things, not the biggest deal in the world, but it is showing us like there are things that are kind of hesitating here at a logical level where they should be hesitating. Macro markets, if we did double top here on the S&P 500, it wouldn't be the first time it happened. We've done this tons of times before, many times in the history of the index. And so when I see things like Bitcoin hesitating at resistance, it's diverging bearishly. We're seeing relatively low volume on things like Coinbase. That gives me some major pause. And when I don't see an objective look at this that says, hey, this is objectively bullish strength here for me personally. I know I'm probably alone in this category, but
I don't think you're alone. I think Jack's
well,
probably the most bullish, honestly.
well, either way,
If I had to guess, he's the most bullish of the three of us. I think you're the most bearish, and I think I'm in the middle today. But go ahead.
I think that's fair.
yeah. But either way, even when we look at daily structure, this sort of stuff. Let me clean this up a little bit for you guys. This sort of stuff where we see, let me just get a new chart altogether. Sorry. Swear to God, I'm a streamer. This sort of stuff here, where it's like, where it's running into macro levels here, and we're seeing these consolidations at the high. This has all the stink of distribution on a local level here. And especially considering we impulsed off the low. I think I talked about this 2 market power hours ago, but this structure, this right here, is very, very reminiscent of this structure here. Like very, very reminiscent, where we have almost like a double top sort of thing. But really what I'm looking at is this thing right here, where, if it takes a bunch of strength and we see this huge dribbling death, and then it just impulsively rallies off the low. We see this exact same structure here. And I would not at all be surprised if this whole range here, that I have squared off here, if this turned out to be a larger range that maybe even potentially turns into a distribution thing, because, not to bum everyone out, this thing's looming over the back of my mind, where we have this very clear trend line here on the lower boundary, very clear trend line on the upper boundary. And it's making this broadening wedge. And broadening wedges in and of themselves aren't objectively bearish, they're not objectively bullish. I mean, they kind of lean, truth be told, they kind of, if you ask Polkowski, you know, he's got an old school website where he's calculated like the odds of them breaking up and breaking down. His statistics show they do skew bullishly like 4%, but it's basically a coin toss. Just like symmetrical triangles for the most part are coin tosses, whether they can break up or break down. They tend to favor the direction of the trend, but it's not unheard of for something like this to break down. Same thing with broadening wedges. So if we see continued weakness here where we're just kind of dribbling out, we're running dangerously close into this lower boundary. And if this thing snaps, the measured move is a return to the base of the broadening wedge. And that falls right in line with like when we draw. I'm not a huge person. I'm not a huge fan of looking at fractals. I think, you know, it's useful to some degree, but it's like when it works, it's like, oh, of course it worked. I mean, when it doesn't, it's like, that's slightly different. And so people find reasons for them not to work. But this is just strikingly similar to me, both in the shape, both in like the way in which the move manifests itself and the place in which you see consolidation. We see consolidation at the high. We see the secondary run of the high. We see consolidation here at the high. We see the secondary run of the high here. It's very small. You can see it, but it's there. And we just see the slow bleeding out before the market ultimately snaps. And what I'm keeping an eye on is, well, what happens if this move happens to the downside? Well, the measured move is unfortunately, you know, somewhere down here, you know, the 16.3. If this breaks, now, does that mean, you know, I know I'm kind of crystal balling a bit right here. Like, I'm not trying to say I know what's going to happen, but what I am trying to say is that there's a bunch of market conditions in place right now that should have people, even if you're bullish right now, you should try to remain objective here. And if it does give way, well, let's look at logical targets, because if this thing breaks, you know, and this is an if, like maybe it holds here, we consolidate and we make something like this, right? We make like some sort of triangle that, you know, it bounces and whatever. But if this thing breaks this lower boundary, we need to be
GG.
Yeah, we need to be objective here. And you know, so far with this Dixie bullish divergence, the market potentially double topping, you know, I'm just not as optimistic here. Like I would like to see a full blown bull market where you know, everything looks good, all the stars are in alignment, and you know, everyone gets girlfriends and Lambos and stuff, and this just doesn't feel like the market conditions to me at this moment. Maybe that changes by the end of the year, but to me, there's a lot to be hesitant about personally. And you know, maybe it pulls back and this whole broadening wedge ends up being a nothing burger and it rallies. But until then, you know, I'm very, very skeptical of this market structure.
All right.
I think that's probably it for me.
I got one question for you. That's okay.
Yeah.
I see you have a tab open at the top for Bitcoin Cash. When have you started focusing on the real Bitcoin?
So you know what's funny is
that's a joke, chat. Yeah, okay.
I've had this tab.
We caught him in 4K
for a long time, and I haven't even looked at it. Like someone asked me to look at Movely, because I use the app and not the browser, it just kind of opens up automatically. But
right.
Dude, apparently Bitcoin Cash.
We got him.
Crushing it though. Look at that. Jesus Christ. What is that?
That's a good move.
That was because they decided to list it on an institutional exchange, EDX. And as I've said with GME and other stuff, like, look at how long that thing was flat. You're not going to get that move when you're still like crushing lows. You know, you're going to get a move like that when you're flat for a year.
Yeah. I mean, it did make like a really clean, like head and shoulders bottom here.
For sure.
And it probably ran its target if we actually measured it. Like, what was
big
that?
time.
That's 69. It actually like doubled it. You know, whatever. But Oh, I guess I'll talk about just a couple other like smaller deal things.
Sure.
So Costco, I meant to talk about this last week, but this is like, dude, don't short the.
Holy crap.
Yeah, it is like
Oh my God.
the people want hot dogs, my man. they want hot dogs and $5 inflatable rafts. And right now, like monthly or the weekly is full blown breakout. Bollinger Bands are that dude is definitely dehydrated at this point. He's just like, yes, this fucking Bollinger Bands are crushing it. Like, look at that. Like, this is the type of bull market stuff I would like to see on Bitcoin, where it's doing what is called riding the bands, like consecutive closes.
Mhm.
Every red thing just immediately bullishly engulfs. Like, that is what I'm looking for. And this thing is set up for a massive move. Even if we look at just this triangle, this measured move, it's pretty big. It's like 100% move or something like that. Sorry, it's 100% move if we look at like the pole, like if we do like a traditional, like a pennant type deal. But even just this is a 50% move. It's $170. Still has a ton of meat on the plate. So in my book, like this is one of the diamonds in the rough that for whatever reason no one's really talking about, which is fine. But like anything that gets a red week, that's like just fucking buy it, because anything that returns back to the Tenkan or the Kijun is a buy for me. And when we look at like the monthly, like look at this thing, like it doesn't lose. Like for the last 12 years, it has done nothing but like Kijun bounces, all the way up. Even throughout the bear market, like every time it touched the Kijun, it was like buy.
What bear market?
Anything.
Jeez.
Exactly, dude. So anything on Costco that touches that monthly Kijun, or especially the weekly right now, because it's at markup, big buy signal.
And speaking of McDonald's, I think McDonald's hit an all-time high too, didn't it? Like over the past week.
What is it?
I haven't looked at it in a long time, but
is it just McDonald's?
MCD maybe? I don't know.
McDonald's.
Oh, because I was thinking of that story. That's why I said. Let's see. Yeah, it's kind of just cruising along.
Maybe not an all-time high, but it's sitting there.
It's got this C-clamp
anyway
working out. Yeah. There's a few of these stocks like that are doing really well right now.
Not Bitcoin, that's for sure.
Yeah.
Even silver, because I'll talk about it later too, but silver looks okay, right? Like what's going to break out? What's going to break out first? Gold, silver, ETH, or Bitcoin? You know, I don't know.
I'm personally leaning gold. I think new all-time high on gold before Bitcoin. And that's easy. That's an easy call for me, because it's like it's right there. It's
he said gold, chat. He said gold. If he's wrong.
Yeah, Peter Schiff is finally going to get his day in the sun. Fucking 15 years later, he's like,
I don't know. We'll see.
I told you so, you crazy kids.
Schmitty, I've never seen you and Peter Schiff in the same room. Just saying.
It's true.
And we both do live in Puerto Rico. No, I don't live in Puerto Rico, but I'd like to. Puerto Rico's beautiful. Anyway, someone else's turn.
Schmitty, you want to go? You want me to go? I'll be quick. If you want me to do it, you can have the rest of the time. No, I'm sorry, Josh. I said Schmitty. My brain meant Josh.
You can go. I don't think either of us have too much. I mean, nothing's really happened.
Yeah. All right.
I'm curious to hear how bullish you are on Bitcoin here.
I'm
guessing you're going to be talking about some sort of spring. I'm guessing, but we'll see.
All right.
Then I know how bearish I could be. You know, we got to even it out.
Some sort of spring. That was a good call, actually. So, first thing I want to point out is what the bears in the room are talking about. Bears in the room, especially when it comes to the Wyckoff side of things, there are a lot of posts, and I'm talking about really viral, multi-thousand liked and retweeted tweets, all focused on this element, right? With the up thrust, and then like the breakdown, and we're all headed to zero. Like it's that sort of thing.
Looks good.
I mean, it's not bad, right? Like if you just look at it and if you're like, oh, okay, there's a sign of weakness and an up thrust. But one of the things I've tried to focus on my streams is coming at this to say, I really don't think that's what this is. Despite the fact that there's a sort of like cookie cutter overlay fractally element to it. There's kind of like a psychology thing that's missing from this, which I'll go over real quickly. Now, before I go over this, this does not mean that forming a trade range, losing support, and then retesting is good. Like this is bad. Like this is a bad thing. I just don't necessarily think that this is this, and here's why. Anytime you have a sort of, I'm going to use this chart right here to make things easy. Anytime you have a distribution event, like a actual true blue Wyckoff distribution event, which again, it fits like right about in here. That's what most of the bears anyway are saying. You got to ask yourself two things. Number one, where was accumulation? Okay, so where did accumulation take place? And then number two, where was markup? Because you don't necessarily have distribution. There's things like redistribution, right? Where you have a big move down, some period of sideways, run the highs, and then come back down. Like that is a different animal. But true blue, you had your low, you had your markup, and now you're distributing. Where was this and where was this? So the only thing that I've seen, like the only coherent argument that I've had bears make to me is, okay, well, actual accumulation took place in here, basically in this box. Down in here, and markup then was this to this. Okay, so the question I have then is, I'll give you that this could be some form of accumulation, right? We've talked about this inverted head and shoulders. I'm with you all day on that. Like I'm not going to argue that, but to argue that a true markup event, right? That you took a year and change preparing for all this work, everything that went into it just to get a 24% move. I'm not buying it. That's the thing that's missing for me. Again, for, with this schematic for like accumulation, markup, and distribution, we're really missing this part of it for me. That's supposed to be a question mark. Okay. So, and I can't get on board with being like, oh yeah, 25% move. That was what we spent a year and change working on. Yay. We did it, everybody. Time, pack it up, head home. We're going. So I disagree with the fact that this is distribution. Now, there's a couple other things that it could be. And I think one of them we've talked about, at length through market power hours when it came my way, and all of the streams and stuff since then. And it is the, reaccumulation trade range. One of the most recent tweets that I put out was like, look, a breakdown here is bad. Like this is objectively bad. We do not like to see this. This thing needs to reverse and reverse quickly. And if it does not, then something very similar to what distribution is, could be the case where this is basically, we have lost support. We broke down, we're retesting support as now resistance, and, down we go. So this would absolutely be tragic. Now, on the lower time frame, it actually is doing all the worst things that you would want. Like if you're a bear, you would actually want to see this. You do not have a retest of any lows. It's just a series of higher lows, series of higher highs, and now a big impulsive move, back to the key horizontal. If you're sitting here trading this, especially with a bearish outlook, then you're sitting here going, oh yeah, easiest bear flag of my life before this thing cascades down, making new lows or whatever. What I would like to see, this is the bull's prayer, okay? The bull's prayer is that we're really doing something like what this is. And it's essentially what I just outlined is like what we have to do, and we got to do it quick. And we're right at that point where it's like, is this what's going to happen or not? Now, a lot of the confidence I had in this reaccumulation has been like had cold water thrown on the flames for two reasons. One, that throw over, and two, the fact that we're doing this like really ugly bear flag or whatever you want to call it for a retest. This would be a different story if this did not throw over, if you erase that from the chart, and if you had some sort of like falling wedge out of, what was support and then it rallied back. Like these are all different scenarios, but that's not what we have. So we got to work with it. All I'm saying is the path to redemption here, the character arc, the hero arc here is we have to get back into the trade range and do it very quick. And I mean, like maybe one more test is reasonable, but all things being equal, I would love it to just send for really one reason, to leave the bears behind. There's a lot of bearish, like I was saying, the bearish tweets. It's very trendy to be bearish, and that's not a knock at Schmitty. Schmitty's analysis is like some of the best there is out there, especially despite the bearish outlook, he's usually bang on. So this is not like a knock at him. What I'm saying is what I see trending, the hearts and the retweets and that kind of thing, a lot of that kind of stuff is favoring like, oh yeah, we're definitely going down. And when I look over and I check on funding and I see how people are positioned, this is not a ton of shorts necessarily, but it's a lot more short than it is either neutral or net long, minus our Bitfinex homies, which I never really know how to read these days.
Yeah, that's weird.
I would just ignore Bitfinex completely at this point.
That's kind of where I'm at. I'm looking at more like what is the mainstream, what is everybody else doing? So all things being equal, I like as somebody looking for this big impulsive move to the upside, I like that people are that it's like trendy to be bearish. I like that how the funding rate is. By the way, this is coinglass.com/funding rate if you want to keep up with this yourself. It's a free thing. And I like that we have kind of not given anybody any opportunities to close their shorts or I feel like there could be a scenario where the shorts are the ones on the wrong side of this very quickly. When I look at like impulsive moves, these guys really were the meat of the move down. And ever since then, you could see it, especially on the lower time frame, you could see the swell of volume. And ever really since then, I would imagine that these guys are probably starting to feel the heat, especially on the lower. Now we're on 10-minute candles. You could see just how volatile that was. And if I had a short at any point during this, I would probably be sweating right now. I would not feel ultra confident. I would be worried, despite the bear flag, despite some of the the breakdown, the loss of support. But just knowing how markets work, that puke, if I was anywhere in that, I would be sweating a little bit. Now, if we run this level, let's say the start of that sell off, and like kind of ignoring just about everything else, if you see price impulse back and start to do, maybe one of these, there you go. Now we're back in the game if you're a bear and, meat's back on the menu kind of thing. But between, where we are right now in this gap, I would be very, very careful if I had any kind of short open. Okay. That's all. That's it. That's it for me. Just focusing on the Bitcoin side.
That's it? You don't got anything about alts?
Not really. I say something about your...
No.
Yeah. No.
All right. So I'm going to. All right. I'll send you this in Discord.
Okay.
Where we keep all the secret alpha, by the way.
Y'all can't see all this. Okay, here we go.
It's beta actually. All right. So this you were saying. Okay. So. It's important to keep in mind that like with distribution or accumulation, like it's all relative to the scale that you're talking about, right? So that distribution, in my opinion, it most likely is distribution because it hit the measured move of the accumulation that preceded it, which was the range that I have at the bottom there. Like I trade 15-minute trading ranges all the time, and in good market conditions, like when there's good liquidity, you can trade 15-minute ranges, 5-minute ranges all the time. And that doesn't like it usually when you have those like smaller like reaccumulation markup, that's just nested within on the lower time frames on the larger move. So when we have like, I think the context of this distribution argument is that, well, the accumulation preceded it right before it. You see a very clean accumulation. It creeked down, it jumped across the creek. You see the breakout, huge volume, huge spread, and then it just dies. And that sort of stopping action took place at a really logical level because it was the measured move. So like when you see Peter Brandt talk about like rectangles, like he calls trading ranges like rectangles because he's old, right? He's like, I trade rectangles and whatever. A rectangle is just a trading range, and so trading ranges have measured moves, and the measured move was hit. So I think the argument for the distribution stuff is actually valid. I don't think it has a lot of the classical structure that I would personally look for to like feel confident one way or the other. We only had one breach of the trading range, and that was at the top. This is our first breach at the bottom. Like it's very possible that this thing just rallies back up to the top. But yeah, I mean, I don't think the distribution trading range idea is like as far fetched as you might think.
My only like follow to that is I have never seen, and low time frame is kind of a big question mark, right? So this time period is what, like a month ish, something like that. I just personally have
No,
never.
it's like a week and a half.
This right here, oh, May what, 8th into June. Now it's like this is like a month ish. Like I'm talking about this
Oh, you're right.
accumulation.
Yeah, it was like a month. Yeah.
Into that. But all I was going to say is I've never seen accumulation, the time spent in accumulation, be roughly the exact same as distribution. I've always seen distribution as be like a tenth of the times. You know, you think of like a 2-year long accumulation and like a 30 to 45 day, distribution, like Bitcoin did, that kind of thing. So that's the only thing that would kind of like bother me. But as far as the way you've drawn it and the measured move and stuff, I think that's pretty fair. I think that's a fair counter argument for sure.
Well, so the distribution that took place on the macro scale, like from December of 2020 to May of 2022, that was a year and a half of distribution, and that was triple the length of the bull market period itself. So, I mean, sometimes distribution takes longer than you think it does.
Fair. I was thinking more of like, the last true Wyckoff, accumulation, and then the last true like Wyckoff distribution period. You know what I mean?
Yeah, I mean, so like accumulation can take place in many, many forms, and trading ranges are just one of them. Like back in
Yeah.
April when we had that huge sell-off, like that, even though it was brutal, that is a form of accumulation on a mass scale where it just liquidates every single person. It's like when we had all those it was like when Willy Woo's original, what was his hedge fund that got liquidated back during the COVID drop?
Oh yeah,
The, like, Adamant or something.
Something like that.
Something like that.
But yeah, like those huge sell-offs, like even though it's not a formal trading range, like that is still an accumulation event. So it's important to keep that in mind, that like just like how there's blow off tops, like blow off tops are a form of distribution. There's blow off bottoms that are also a form of accumulation. So like you don't always have to have this like clean rectangular accumulation trading range type deal. Anyway, that's just my input.
Yeah, fair enough.
I just like, who's here buying? That's the question I always ask myself. We have coins coming off exchanges, great. You have shrimp wallets growing, great. You have one BTC wallets growing, great. But like, who's going to move the needle here on price? Because that's not going to be enough. I just don't know who's here. Like we had, like we said at the open, there was all this ETF excitement, and then nothing. Maybe it's just summertime sadness. I don't know. Shout out Lana Del Rey. I don't know. Like we've done a pretty good job today, like bouncing off lows after the FOMC meeting, which seemed to be, it was as expected, but at the same time they were trying to goad him into saying that we're going to pause here, we're going to hold, give some sort of forward guidance, but he refused to do that, which is perfectly within his right. And I think the market is taking that as, we've topped in rates. Yeah, it's the highest it's been since 2001, but the journey is over, and now we just get to find out how hard of a recession we get, right?
Well, okay, so here's my last thing on Bitcoin being in distribution, like true distribution. Like we need to go back to the drawing board, find accumulation again, the whole thing. Why, if it truly is like a distribution event, everybody's leaving, big boys selling to the masses, haha, sucker, you bought my bottom, that kind of thing. Why are all the like kind of secondary and tertiary Bitcoin stuff breaking out? Like, why is MicroStrategy sending it? Why is GBTC, breaking out? And I know the discount's closed and the premium and all that kind of stuff, but it's not just that, you know what I mean? We have Coinbase, GBTC, MSTR. There's a lot of activity. Even some of the mining stocks. I mean, I don't want to like.
Well, you're just making my argument for me.
Okay. Okay.
No one's buying spot. They're buying that stuff, right? Because they're like, oh, this is the picks and shovels, or this is crypto adjacent, or this is a soft crypto ETF in MSTR's case.
Right.
they're not buying spot Bitcoin, you know, and that's a problem when we're sitting here the tightest weekly events we've ever had going back since inception, which is insane. Just looking at the chart, you wouldn't think that like volatility is that low because we had that huge spike after that falling wedge. At least I certainly didn't think like bands were that tight, you know, but they are, and we certainly feel it because nothing's happening.
Well, so it's very possible that like with the MicroStrategy thing, it's just making a larger trading range. Like we haven't really broken out that far. Like we're only, I don't know, like it topped, I'm saying only 30%, but like the range itself is it's $230, right? Which was 170%. Like if we look at the breakout right now, this could be like the sign of strength in a much larger accumulation trading range.
Yeah.
Like that, like if it starts bleeding down and it closes below that upper boundary, just like I was talking about on Dixie, like if it closes below that 364 mark, well, the target is most likely going to be the bottom of that range. And the volume and price spread all have signs of accumulation taking place here. The question is just, is it the end of accumulation? Because if supply shows up for whatever reason and shoves it back down into the range, we're going to be targeting the bottom side of that range. So it would not surprise me one bit, if it was actually more of a prolonged accumulation period. And the same thing goes with like Grayscale, GBTC. It's like the volume isn't super high here. It's diverging heavily. It looks more like a mean reversion, where it filled, it did that giant gap fill. And I know Josh's cloud settings show something different, but the default cloud settings, like it hit the edge to edge. So
First of all, how dare you?
Okay, so something I've always wanted to ask you, but now that I've got you in the public spotlight, I'm gonna corner you and scream at you.
All right.
Why do you use doubled settings on traditional markets rather than default?
So the main reason to use doubled, if we take the crypto versus legacy out of the conversation, the main reason to use doubled is just to slow down the signals. Ideally, that makes the signals less noisy and gives you better entries, better exits. It definitely slows everything down. And for me, I like taking fewer trades rather than more trades. But it's like fine tuning on a microscope or a telescope. You got to figure out what works for you. If you like more entries, maybe a little bit noisier, if the daily single or whatever you use is good enough, like don't listen to me. Like what does it matter, right? But for me, I just preferred the slower settings, just giving it its sweet old time to make a move. And really, you're just looking at the next time frame up. You're looking at the 2-day cloud if you're looking at the daily doubled, right? And for legacy, maybe just back test it on whatever you like to trade, whatever your trading style is, and see. Yeah, I might make fewer trades, but are the trades I make more profitable? Am I closing these, at a higher hit rate? That sort of thing. The other thing, just as for confidence, for me, when I see a signal on the cloud on those settings, I'm like, okay, like I don't mess around because I know what that should mean. I know the impact that type of signal has had historically.
Yeah, so I always thought that you were doing the doubled because it was a 24-hour market. And so you were looking for, because, traditionally, I don't know if you obviously know this, but most people don't know that like the Ichimoku cloud was designed for like Forex markets, right? So it was like very specific to Japanese markets that were open 6 days a week for a certain number of hours, blah, blah, blah. And like, that's why the settings are what they are. But for crypto, obviously it's open 24 hours. And so, spot crypto is open 24 hours. And so the settings don't necessarily make logical sense. And you can get a lot of like noisy, like you were saying, like noisy crap that can just kind of give you bad signals. But I always thought that was why you were doubling it. But
no, the doubling is mainly just to slow everything down. I mean, you can double anything, double your RSI, double your MACD. Just, if something looks super noisy, just double it. And part of that's just adjusting to the speed of the market. Like right now, you want to be trading ETH on the daily? I would argue no, because it's done nothing for like 60 days, right? Like what is a daily signal going to tell you? For me, it's same thing with gold, right? Like I want to be looking at the signals on that should matter, which is something on the weekly. You mentioned it with a Dixie, right? The monthly level should be more important than a weekly level historically. So, for me, a lot of it's just using the higher time frames to help just make better trades.
Okay. All right, that makes sense.
But the cloud purists will argue that changing the settings is blasphemy, and that it's not actually based on days of the week or anything like that. It's based on some like wave theory. I don't know. I really need to read a book from Uichi Hosoda, who's like the creator of Ichimoku. Sadly, I haven't done that yet, but I need to figure out like, okay, like what is this really? I think I know what it is, but I don't actually know what it was created for. Jack, you were going to share something. Go ahead.
No, I was just gonna. I thought it kind of came to a natural end there. I have your CPI data pulled up. I was just making sure you knew the shared screen you did on Zoom. I have that.
Yeah, we're good.
Okay, cool.
We just need to keep talking though, because Bitcoin is going through a nice rally right now.
I saw that. It kind of ran those highs. Everybody who did that dump that I was talking about, it basically hit that level. It's like now. Yeah. Okay, now what?
It's weird how decoupled we've been on the crypto side of things from everything. Like you mentioned already, the crypto equities are roofing. Anything related to crypto at all is doing really well. Yet here we sit week after week in spot land, just doing absolutely nothing. I don't think that's a bullish thing, by the way, for BTC. Until we actually see spot activity, then we can say, yes, I expect this to move higher. I expect B bands to break out. Even though B bands, I'll share that in a second, look okay on the weekly. I don't know. I'm just hesitant to assume like this looks real good here. That like head and shoulders channel thing scares the shit out of me. Okay.
Do you have a visual for it?
Like, yeah. Like Schmitty was saying, this measured move is not pretty. And at that point, we're below the daily cloud. I know the daily cloud is basically the bottom's at like 25K. You've got a key June at 28 on the daily. I'll look at that in a second. But I really don't like that we are at the bottom of this thing. We're almost at the end of this thing. I don't like that we keep making these like parabolic moves to the downside. Now,
yeah,
if you're bullish, you're thinking, okay, we're going to trap some bears. We're going to just like eke out of the bottom of this channel like we did in June, right? At the very bottom of that falling wedge. And as Jack says, send it higher. But until that happens, I can't say like, man, this looks so bullish. I can't wait to screw over the bears because I don't know. This just doesn't look like a market that wants to go up. And I can't see a reason why I would want to go up either.
But BlackRock is accumulating.
I know, but that's like the massive question mark, right? Like, how long is that going to take?
Well, every time I saw those tweets, it made me want to hit the sell button more than literally anything else. So,
well, I think over the long term, go ahead.
I was going to say that wouldn't the argument be that like they want to accumulate lower, not after a 2x rally?
I mean, I would tell people, look, who gives a fuck what BlackRock is doing? Now's a great time to DCA, and if it goes lower, be happy.
Facts.
Like, what does it matter? Like, we're in a pre-halving year. We talked about that all the time. Everybody talks about that. I wouldn't expect a miracle here. And if the ETF lines up with halving, great. If rates coming down lines up with halving, great. Eventually, we're getting an ETF. Eventually, rates are coming down. If that's in 2024 or 2025, whatever. But I don't think there's any reason to rush it. In the near term, though, so we had the Fed meeting today, FOMC, and the Fed is all about kind of holding rates here. Powell basically said for the rest of the year, he doesn't think we're going to lower rates. And the problem that people are pointing out now is commodities are coming back up. Gasoline's coming back up. Food prices, arguably, really have never really come back down. I mean, they came down a little bit, but multiple year food prices just keep creeping up. So what we're seeing on Truflation kind of backs up those concerns of inflation kind of bottoming out and potentially turning around here higher, which would make the markets extremely angry. And I don't think crypto would stay bullish if the S&P turns bearish. We've been flat when the S&P has been absolute insanity.
Yeah, crushing it.
Could you imagine if it was the opposite? Like I don't think Bitcoin is just going to continue the beat of its own drum if the markets start to get some data that suggests CPI is on the rise, or I don't know. The flip side of that is, well, if unemployment comes out and it's starting to get hotter, I think the market starts to think, okay, then we're starting to get towards the recession territory finally. But I really don't like seeing CPI kind of curl, on the bottom there. And I'll get to the commodities in a second, but another really great one, I know you like watches, Jack, is this is a Rolex index.
Mm.
And if we're talking about, like NFTs, collectibles, the general Joe public, right? I feel like they're running out of money. Inflation is hurting everybody, right? And I think you're kind of seeing it in this charts like this, where people aren't going risk on with like watches, right?
Do the 3-year. Do the 3-year. I think it's even
they
worse.
are
Yeah, that peak. Ugh.
Like, who's buying? You could argue luxury goods are probably okay because they're luxury goods, whatever. But I don't know. This is just another piece of the puzzle, right? Of what's going on in the broader sense, and who's here. Is retail here buying? I don't know. It doesn't feel like it. What are they buying? Hamster garbage? I don't know. So I would love to see this turn around with the altcoin market, if anything. But this just scares me more for the alts than anything else, because this just looks like death.
I saw a couple other things too that came out from the Fred, FRED.
Yeah,
it was like the household savings is at like a multi-year low, and number of delinquencies on credit card and primary mortgages are at like a multi-year high. So there's a lot of signs of pain to go along with that chart you just shared.
Yeah, and car repossessions 20,000 a day. That's more than greater GFC. Global financial crisis. It's there's some scary stats out there for sure. As far as the DXY, I think just watching the daily cloud, watching the 200-day moving average and this channel, I think it's fine. We could say there's some sort of div here, and there probably is, as Schmitty pointed out, but as long as this channel holds, I think we're okay. What you don't want to see if you're bullish anything other than the DXY is this thing starts moving higher. The good thing is globally, our inflation is kind of under control relative to the rest of the world. So DXY should continue to weaken. We have, I think it's BOJ decision this week. BOE, I think, is this week. So we'll probably see some reactions from them off that. But ultimately in the US, we really don't want to see those CPI numbers start to creep up, because I think that's when the market gets extremely angry. This is gold. It will be interesting, like we were talking about, is gold going to break out here? I don't know how gold does during recessions. I feel like I should look at that, but I don't know. It looks like it wants to break up eventually, right? We've talked about this for a year, probably. I don't know. Yeah. Or more. I feel like people were talking about this in 2021. I certainly was. 2022, right? Like that was the handle. You were good to go. We had central banks buying. We had all this other reason, and just straight down. I don't know, but gold looks okay. Who knows when that thing moves? Silver, same thing. Silver looks okay. I don't know where, I don't know what that means historically in markets. What happened in 2010 when silver made a move? What happened post 2020? I think we all know that was, COVID, stimmies, inflation. So I don't know how it does in this
That's
type
interesting.
Of economic environment, but
just quick note. So like the 2015 to 2017 is when Bitcoin went $200 to 20,000, and it was like flat. I've never looked at that time period, so that's interesting.
Yeah, if you look at gold during like the housing crisis, it's actually when it went into like a decade-long bull market.
Prior to you're talking about like 08, right?
Mm-hmm.
Yeah. I know it did really well in the debt ceiling stuff up until this was in 2011, right? Anyway, so yeah, I don't know. It's something to look at though. But just technical wise, this looks okay. This looks like the S&P before it broke out. It's got multiple higher lows. Looks good. Oil, back to the inflation commodity conversation. it's not good for inflation if oil starts creeping back up again, because that's going to factor in to the calculation CPI and whatnot. We had the benefit of just, a bearish oil market, right? We were draining the SPR, still probably draining the SPR. I don't know. This also has a pretty clean Adam and Eve on its side. I think anymore, we rarely see like an Adam and Eve that has an even bottom like that. But this looks really good to me on the 2-day as far as trend is concerned. So I don't think that would be a good thing for markets broadly because of the CPI implication. Gasoline too also just looks really bullish, which is terrible for everybody. So I don't drive hardly at all, so I don't really even know what gas is around here. But this is a multi-year, no, sorry, multi-year. We'll call it multi-month. I don't know. Technicals on this just look mega bullish, so that's not good for any of us.
Yeah, big ass head and shoulders bottom.
Yeah, exactly. Just not good. Now for crypto in the last couple of minutes here. Like we said and have said, volatility flat. I think in a vacuum, you're like, yeah, let's go. This thing's consolidating above the 20-week moving average. It's super tight on the B bands. This is what you want to see. If we look at all these types of squeezes historically, they've almost never been wrong. Arguably never been wrong. Even back since 2012, anytime we've had a squeeze of this caliber or lower, it's gone as you'd expect, right? We've consolidated above the 20-week moving average and we got continuation. We consolidated below, we got continuation. Bearish side, right? Even here we started to consolidate. This is pre-FTX collapse. Started to squeeze and consolidate to make lows. So as maybe bearish as I feel, the chart is saying everything's fine here, until we actually start closing below the 20-week. Now if we still consolidate below the 20-week and get tighter on the bands, then that's easy to get super bearish, right? Because then we start talking about stuff like this breaking down. We talk about the measured move. We talk about a move through the daily cloud, which is at 2,500. So 2,500 easier. Sorry, 25,000.
Way down there.
Look, I've been in Bitcoin a while. Sometimes I forget a zero. But down there, it's easier to get bearish. I think here, flat makes sense. I think to not have like a strong conviction makes sense. I certainly don't. I'm long spot ETH, long Bitcoin spot. I'm hedged a little bit on a leveraged ETH short, but overall, I don't really have a great sense of much of anything. This breaking down, like we already talked about, certainly isn't bullish, but if it recovers, I think the most bearish thing is actually the Ripple news just reversing the entire market after the fact, right? Like if there's anything that's going to help the market, maybe the news is just a bunch of bullshit anyway, which a lot of us feel that way. Mm-hmm. But if you're talking about regulatory relaxation in the United States and like helping the altcoin market, that was the time. But we didn't quite see continuation off of that. So still hanging out here. I think I have a cloud. We just pull up a BTC cloud real quick on the daily. ETH kind of same thing. ETH, tightest on the weekly as far as Bollinger Bands are concerned. And not much happening in ETH land. Lots of staking going on, but not much else. This is Bollinger Band cloud. Sorry, Bitcoin cloud. Looks fine. We just had impulse flat. Not really the type of trend you want to see. It's not like it's no Costco, right? I think we can all agree. Yeah. But it's still okay. It's intact. We're above the cloud. We're above the Kijun. We could have a nice bounce here at 28. But what you really don't want to see if you're bullish is a move from 28 to 25, and especially anything below 25. Anything below 25, any lower lows, forget about it. Yeah. I think that's where we can all agree we're in trouble. And then lastly, ETH. Again, it looks like it should break up. I just don't know. Just zero volume here. It's sort of at the end of the line. And the same thing with ETH relative to Bitcoin. If that starts to make lows, then we're kind of kind of off the table as far as continuation. This too, though, has that, kind of bouncy head and shoulders.
Yeah, a
triple
little
top.
45-degree trend line bouncing along it, that kind of thing.
Yeah. So I think this is the lines we've drawn here are correct in the sense that if we go above or below them, we're going to see a massive move. It's just hard for me here to sit and say, this is so bullish. I don't have a feeling one way or the other until we make a move, and that's that. That's all I got.
Okay. Well done.
We did it.
We did it. Chat. We gave you another one. Another one. We've done this.
Banger.
Another banger. So we've had 2 market power hours as price literally went sideways. So you're welcome, chat. We did that for you. Bored you to death with sideways price action. Guys, thank y'all for your time. Josh, Schmitty, thanks for being here. If there's anything you guys want to chill, go ahead and do that before we end. But chat, thanks for making time, being here. We'll put this on YouTube here in the next day or so. And somebody was saying there were some audio issues with Schmitty. I'm recording on my side, so the YouTube side should be just fine. So if you need to re-watch a part or whatever, you'll be able to do that. Can't believe you actually muted Schmitty, says one of my mods. It's not what happened.
Oh.
All right. Anything to shill? Anything y'all are working on? Any of that? Reflinks, NFTs? What do you got?
No, should I have something? Twitter, YouTube, I don't know, CARPE NOCTOM.
Dude,
you've been totally unrelated, but I've got a partnership with Mark Andreessen that I'm looking to. I heard he's super cool, dude. I'm just kidding, guys.
Josh, you've been popping off on YouTube. You've been banging them out like several a week. Keep it up, dude.
Oh, and no one's here. That's the time to put in the work, right? You got to establish the foundation.
Yeah.
As you very well know, you're out there streaming 3 days a week or whatever it is.
Yeah, trying. Look, my audience of 25 is not going to get their own information, okay? No. All right, well, thank you guys. Chat, thanks for being here. I personally will be live tonight for my normal stream. And then just as an FYI, a week from now, I'll be doing like a Litecoin halving party with Charlie himself. So he'll be on about 7 days from today. So anyway, we'll see you next time. Thanks, guys. Chat. Y'all be good.
Bye-bye.